The Brussels Report podcast.
Welcome to a new episode of the Brussels Report podcast. My name is Pieter Cleppe. I'm the editor-in-chief of BrusselsReport.eu. And I'm very happy to have as my guest today Dr. Thorsten Polleit. He's a German citizen. And he's currently the Chief Economist of Degussa, which is Europe's largest precious metal trading house. He has been working for more than 15 years in the international investment banking industry. He's also an academic. He's an honorary professor for economics at University of Bayreuth in Germany. And importantly, he's also an Adjunct Scholar of the Ludwig von Mises Institute in Auburn, Alabama. I would say the most well-known hub of Austrian economics, and the Ludwig von Mises Institute, Deutschland. So welcome, Thorsten.
Yeah, Peter, thank you very much for the invitation. I'm looking forward to talking to you. And as you know, I'm a big fan of what you do. And so I appreciate very much to be here.
Thank you. Very happy to hear that. So obviously the topic of today is no surprise. In one word, inflation. For years, Austrian economists have been warning for it. Personally, I think we've been vindicated. The only problem is that inflation was not visible in CPI statistics. And today, we've seen a new statistic in the United States. I think inflation is at 6% at a 30-year high. So it's really impossible now to deny the problem. So I mean, what are your thoughts on that? And maybe more specifically, do you think that it is possible that this simply remains for a few years elevated at, let's say, the 3, 4, 5, 6% level?
Peter, you made a very important point. Inflation hasn't been gone. It has always been with us, but mostly it hasn't shown up in consumer goods prices, but it has pushed up asset prices in the last decades. Look at the stock market, the housing market, that was rampant inflation. So we find ourselves in a situation now where inflation is actually creeping into consumer goods prices. And as you rightly pointed out, in October 2021, the annual increase in consumer goods prices in the US was 6.2%. And that is, of course, a terrible thing for most Americans, because inflation erodes the purchasing power of money. It makes people poorer. And inflation is a societal and economic evil. And when I look at what's happening in the euro area, I would say that we also running into an inflation problem. Inflation will remain elevated, I'm afraid, in the years to come. And in this context, I just wanted to point out that most people consider inflation as a rise, an ongoing increase in the consumer goods prices across the board. However, rising goods prices are actually a symptom of an underlying cause. And the underlying cause is monetary inflation, meaning the expansion of the quantity of money in the economy. And when we look at what has been happening in the euro area, we would see that since early 2020, the European Central Bank has issued so much new money that a monetary overhang, as I call it, has been built up, and it is around about the size of 17%. And that means this 17% is the upward price potential for goods and services here in the euro area. And so I think we are heading towards a regime in the coming 2 or 3 years where inflation of 4, 5, or even more percent are quite likely, I have to say. And so people should take that as a warning, because inflation will eat away the purchasing power of their lifetime savings, of their incomes.
And isn't there a risk that people basically react to this, that they do not stand by idly losing 5% officially, probably a lot more in real terms, and start buying a lot more hard assets than before, which then in turn, drives up the CPI?
Yeah, well, inflation is a very complex phenomenon, and it's actually a dangerous phenomenon. You are rightly pointing out that people will react to higher goods price inflations. For instance, they increasingly exchange their money against, let's say, stocks and houses, real estate, art, other commodities, and that, of course, could drive price inflation even higher. If people lose their confidence in the purchasing power of money, this is actually a rather plausible scenario. And this is why mainstream economists, many politicians, and representatives from central banks keep talking to the general public, trying to convince them that inflation is just a transitory phenomenon, that it will sooner or later result in lower goods price inflation. But what I just said is to me the more plausible scenario, namely that this tremendous monetary overhang will make price inflation worse, not better, in the coming 2 to 3 years.
And you mentioned the ECB, which is of course 100% correct. They have been, inflating the money supply with all kinds of programs. Actually, with Brussels Report, I'm coming out soon with an overview of all the, the monetary transfers and the fiscal transfers that are happening in the Eurozone and at the EU level. So the ECB's programs are a big part of that. But that said, of course, also the banking system is or sort of the banks that have been licensed to create money out of nothing, you could argue, have I think, don't they have a responsibility also in the monetary growth that we've seen in the last few years?
Well, that's a very interesting question. Most people consider, the central bank as being the independent institution taking care of our currency, and in close cooperation with commercial banks, they try to basically stabilize the currency value and providing the adequate amount of money in the economic system. Economically speaking, it is more a kind of cartel, a cartel between the central bank and
Yes.
the commercial banks. And I think that gives us a different perspective on things, how they unfold. And but you're right. Commercial banks have a license to participate in the central bank's money production monopoly, so to speak. The central banks issues central bank money, and with central bank money, commercial banks can issue their own commercial bank money, and together in close cooperation, as I said, in tandem, so to speak, they have been expanding the money stock in the economy to an extent that a huge monetary overhang has been built up. And as I said earlier, this will now drive up goods prices. It may be that consumer price goods go up. It may be that asset prices will increase strongly, namely stock prices, housing prices, etc., or a combination of both. But at the end of the day, the purchasing power of the euro will suffer. The purchasing power of the euro will go down.
And to sort of measure let's say, the erosion of the purchasing power of the euro, and then of course we cannot really know where then the bubble will be visible. Would you say that M3 statistics are the right way or the right statistics to look at?
Yeah, I think that is the monetary aggregate which is most important in explaining what's going on as far as consumer and asset prices are concerned in the euro area economy. And as I said earlier, the monetary overhang, the money stock that has been built up, that hasn't shown up in higher prices, is currently around 17%, and the money stock is still growing at 7.4%. So I'm inclined to think that the monetary overhang keeps growing. And as I said, the inflation problem will become more severe. And people who would like to learn more about the inflationary implications, they have a good reason to take a closer look at what's happening with the money stock M3.
Interesting. And then sort of the consequence of all that is, according to many, the so-called zombification of the European economy, a phenomenon we also see in Japan, where they are also engaging in this extreme monetary experiments. I mean, the idea is that this is resulting from the fact that governments, they don't have to reform anymore. There's free money printed by the central banking cartel. And in the end, because there's no competitiveness reforms happening anymore, European companies cannot compete anymore, and you see companies just basically sort of surviving, but ultimately they're zombies. So that's the analysis, at least. I mean, to what extent do you agree with that? How severe is it? Because what we see in Europe, we still see startups, we still see real growth and real innovation, despite all. So what's your take on this?
Yeah, I think this is also a very important aspect for growth and employment, the overall welfare in the euro area in the years to come. This zombification of the corporate sector. I think it's important to be aware that we live in a so-called fiat money system. That means, as we said earlier, that central banks, in close cooperation with commercial banks, increase the outstanding money supply through credit expansion. And this basically amounts to money creation out of thin air. I think you used that term earlier, and I like it a lot because it describes the reality of money production. New money is actually injected into the economy, not being backed by any savings, and the injection takes place in the credit market. And this artificially increased credit supply lowers the market interest rates below the level that would prevail had there not been such a credit injection. And the point here is that the artificially suppressed market interest rate induces people to consume more, to save less, and it encourages companies to invest more. The artificially lowered interest rate induces entrepreneurs to start investment projects which they wouldn't have started had the market interest rate not been artificially lowered. And so to speak, this is an built-in zombification of the economic system. And once this system gets into a crisis, central banks, in this case the European Central Bank, lowers interest rates even further, lowers capital costs, and keeps companies with bad business models, with models which are unprofitable, alive. And that, of course, reduces the competitive forces in the economy, lowers the degree of competition to come up with new products, with better products. And this is certainly a development which we can see in Japan in the last couple of decades. It will lead to lower growth rates, to fewer jobs, and the overall prosperity of the people will even decline in the years to come if this problem is not getting sorted out.
And maybe a little sidestep. Of course, these kind of schemes are visible all across the world, really. But particularly in Europe, we have the Eurozone, where I would argue that sort of the winners and the losers of these schemes are not always evenly distributed. So perhaps could you argue that the instability of the fiat money system makes the Eurozone more unstable, and that all these instabilities. Think of the Target 2 system, where Germany has more than 1,000 billion euro of claims on Italy and Spain, on Southern Europe. That these instabilities would ultimately then, endanger the monetary union in Europe?
Well, I have to say that as things stand today, I'm inclined to think there is still an overwhelming support for keeping the euro together and defending it at all costs. And because most people are not aware how high these costs will be, and you hinted already at some of these costs. For instance, the Deutsche Bundesbank has a target 2 balance of more than 1 trillion euros sitting on its balance sheet. That's roughly 30% of GDP. That's massive. I mean, if the taxpayer would have to shoulder a huge bill once the Eurozone would getting ripped apart, for instance. And also in 2012, the European Stability Mechanism was established, and it got a lending capacity of around about 500 billion euro to be shouldered by the euro area's healthy member states. I mean, it's a huge amount. And also in August 2020, the 27 EU states agreed on a 750 billion recovery fund. I mean, also a huge sum of money, and it will be borrowed by the EU in the years to come. And a final cost in this context, the European Central Bank is already pursuing an inflationary policy. Inflation is working like a taxation. It taxes money. It takes away the purchasing power of money from the people and transfers it to the borrower, in this case, the states. The ECB drives up price inflation with its monetary policy, reducing the purchasing power of euro. And this is a tremendous cost for the people in Europe. So to cut a long story short, I think at the moment people do not really realize how expensive it is to keep the euro together. But over time, I think people are going to wake up. They will see that the costs of getting the euro, of keeping the euro together with artificial means, will lead to lower growth, fewer freedoms, economic and civil freedoms will erode. There will be more regulation, more control, more taxation. And this will actually reduce the productive capacities of the economy. And so over time, I think people will become aware how costly it is. And then the question will be raised whether whether the euro area can be reformed, or whether there will be other solutions available, namely splitting it up, adopting, let's say, a free market in money, giving people the freedom to use the euro as a means of exchange, or to opt for other alternative means of exchange, like cryptocurrencies or gold or silver. We will see. But the setup of the euro area as it is today, I don't think it can survive as it is.
Okay, interesting. And actually, on that, so perhaps people may say, well, you know what, I rather don't wait on politics. I'll take my fate in my own hands, and I'll buy some gold. I buy some physical silver to defend myself. I would say that doesn't really need a lot of explanation. Gold and silver have been serving for a few thousand years as a method for people to successfully at least keep their belongings, not become wealthy, but keep what they have. But then what's your thoughts on crypto, and specifically Bitcoin? Is the jury still out on that, or has it already proven to be a way to defend yourself against central bank madness, so to speak?
Well, Peter, I'm very much in favor of the emergence of crypto units. I call
All
them
right.
crypto units rather than cryptocurrencies for certain reasons. I very welcome this development because it is what I call a competition of currencies. It is actually a process that is meant to bring better people, to bring better money to the people. Cryptos challenge the money production monopoly of the states. And I think this is a rather productive development because a free market in money can solve many of the problems we are facing today, and also there is no economic or ethical reason why the state should monopolize the production of money. Uh, in contrast, there are lots of good reasons, economically and ethically justifiable reasons, why people should have the freedom to choose the kind of money they would like to use in their transactions for trading purposes, for saving purposes, etc. And a free market in money is actually a natural thing.
Mm.
Having monopolized money is an arrangement, is a development of modern times. But the monetary history is a very long stretches over very long periods of time, and the normal kind of money has always been a money that has been freely chosen by the people, mostly in the form of precious metals, gold, silver, you mentioned that already, or even copper. And I think this is the only way to have a free market in money, to provide people with sound money, with good and reliable money. And just look at the last couple of decades, you would see that this unbacked paper money or fiat money issued by central banks in cooperation with commercial banks, it has always created problems, boom and bust cycles. It has caused high inflation periods. It has even caused periods of deflation. It has let the economies run into ever greater amounts of debt. Other problems can be mentioned as well at this juncture, but I confine myself to just say the key uh, the key towards getting sound money is allowing a free market in money. And I think this is a concept which some regional states in the United States of America have already adopted. They have, for instance, uh, uh, done away with the VAT tax and the capital gain tax on gold, silver, and other precious metals in Texas, in Wyoming, in Idaho, in Arizona. They allow for a level playing field where people can, on a regional basis, use gold or silver coins as a means of exchange, or the dollar. And I think this is a wonderful concept. It needs to be broadened, and I think it will come at some point, and it will be recognized as a solution of our monetary problems we face today.
Okay, and obviously that's all very sound and true. But then obviously there's a loser, and the loser is the government, because some suddenly, if this whole crypto revolution actually breaks through, they will see their I mean, a lot of the government financing is currently not coming from taxes or from debt, but from the ability to issue their own money. And if people no longer use that, then I mean, simply the spending capacity of governments dramatically shrinks. So, should we not expect the empire to strike back?
Yeah, Peter, you're absolutely right. Of course, governments insist on their money production monopoly, and you can see the way they try to deal with the crypto units, like Bitcoin in particular. They want to discourage people from using it, and trying to put restriction on the trading of Bitcoin against other goods and services. Of course, this is the reaction one has to expect. As I said earlier, there is actually no economic or ethical reason why the government should be in control of our money. The only reason why the government has the monopoly of money is power. I mean, being the monopolist of money production makes you very powerful. And our governments have become so powerful, have become big and deep governments because they are the monopolists of money production, to the great disadvantage of the greater majority of the people. And of course, if there's a change in the monetary landscape, meaning alternative money candidates increasingly challenge government's money production monopoly, it will put a limit on government expansion. And in many countries, it will mean that the government will have to shrink going forward. And of course, many politicians and bureaucrats wouldn't like that. But I think, and that is important, I think, to note, it would be it would be favorable for the vast majority of the people if free market in money would succeed in taking the money production monopoly out of the hands of governments and their politicians.
Yes, and you don't think that somehow they can ban it, or you think it's already going to be too late, it's going to be too big to ban it, or what's the thing?
You know, I still remember 1989 when the Berlin Wall fell. My teachers at that time were saying, well, the former GDR, they will manage to keep on going for the next decades, and it's very unlikely that the wall would come crashing down. But a couple of days later, I saw it in the newspapers, and that was a watershed experience for me. Socialist regimes cannot survive. Sooner or later, they will fall apart, and a good idea in a free market has a tremendous power to change things. And once people realize that there is better money, that it is possible to have a sound currency, a money that doesn't lose its purchasing power over time, that cannot be increased at political expediency at any point in time, etc., people will do everything they can to get hold of it. And it will be a power struggle, no doubt, but in the end, I think the chances are there that we will get rid of this destructive scheme of the monopolization of money through governments.
All right, back to today's world. So is it possible that we see a massive correction in asset prices in Europe, in the Eurozone? I'm thinking of stocks, real estate, bonds. Is that conceivable, or do you think it's anyhow possible to try to predict that?
Well, it is. Is it conceivable? I would say certainly yes. The question is such a crash likely to happen? Well, I would say the probability of such a scenario is certainly not zero, but the probability might not be as high as most people think. And the reason is, once financial markets come crashing down, it's very likely that central bank will open up the monetary spigots and issue even more money at even lower interest rates. Inflation, the inflationary policy is considered to be the policy of the least evil of alternatives. And so we have seen that in early 2020, we have seen it in 2008, 2009, and even in 2000, 2001. Central banks increased the quantity of money in an effort to fend off a crisis. So I think as things stand, the risks for any investor, for any saver, is not that we gonna experience a sharp asset price deflation in the next 12 or 24 months, but that inflation is gonna rise and will destroy the purchasing power of the official currencies.
Yes. In I think it was 10, 11, 12, 13, the Eurozone was in very bad weather. and then the Federal Reserve was organizing this dollar swap. So basically, they were pumping liquidity backed by the U.S. dollar to prop up the Eurozone. I mean, there's some debates on how how important that was to save the Eurozone, but I think it's sort of underreported. Now, the thing is, it can happen again if Eurozone politicians do not longer get along. Maybe the U.S. may once again bail out the Eurozone, and then of course ultimately the U.S. can do that because it has the world reserve currency. So our paper money system is based on the US dollar. So
Yeah.
I mean, how sustainable is this position according to you? Is it conceivable that we see? You already, of course, mentioned Bitcoin and crypto, but is it conceivable to maybe have another fiat money issuer, China, taking over? Or is it conceivable that the US sort of collapse and that we go to a Bitcoin standard or a gold standard?
Well, there are a lot of scenarios out there which have a certain probability. Let me say that in the land of the blind, the one-eyed is king. The U.S. dollar is still the dominant currency in the world, as you just said, for trading, and financing, and saving purposes. For instance, the daily trading volume in global foreign exchange markets is around about $7 trillion. It's denominated in dollars, and the volume of dollar traded is nearly 3 times the trading volume of the euro, and 5 times the trading value of the Japanese yen. So still, like it or not, the US dollar, the greenback, is still the dominant currency, fiat currency in the world. But of course, it suffers from all the problems fiat money can and does suffer. It is inflationary. It causes boom and bust. It leads to an unsocial distribution of income and wealth, and it drives the economies into ever greater amounts of debt. But still, the world's monetary system depends on the greenback, and I don't see that the Japanese renminbi or the euro or the Japanese anytime soon could challenge that position. The danger is, I think, more that the global financial system becomes even more concentrated on the dollar, so that the dollar will become really the world fiat money, the world's single fiat money. And as you know, there are plans out there to merge the remaining national fiat currencies into one global currency, and that is, of course, a nightmare scenario. But
Yes.
it's actually, I would say, a natural evolution, as if the countries around the world don't get rid of fiat currencies. And that is, having said that, it's so important that we have this development in the market for crypto units, and also it is important to know that people basically relearn that there is fantastic, basically perfect money out there. And you mentioned it already. It's gold and silver. It has served as sound money for thousands of years, and there's no reason to think that it cannot serve as well in this modern digitalized economies which are evolving.
Talking about gold, how would you see it being readopted, like after a crash, and then sort of everybody goes to gold in a natural instinct somehow, or after a political campaign? I mean, obviously not, but
Well, yeah. Just let me say that. Because I said gold is kind of perfect money. I love to say gold is mankind's base money. Gold has actually all the attributes that make for good money, that make for sound money. It is
Mm-hmm.
scarce, it is homogeneous, it's durable, it's divisible, it's transportable, it's mintable, and people love it. It's basically perfect money, and I'm not in favor of calling for a gold standard, in the sense that central banks should increase their gold reserves, and then the newly issued money should be gold backed. I'm not in favor of this kind of centralization, because once you agree to having a central bank which backs up its money issues with gold or silver or whatever, it won't take long, and the government is breathing down the neck of this kind of monetary system. What I'm in favor of is a free market in money. Peter, I would love to see that we all have the freedom to choose the kind of money we would like to use, be it the dollar, be it the euro, be it Bitcoin, or be it gold and silver. And then let the competition system decide which is the best money. And I think this is the way towards getting better money for the people, for providing for a more stable economic development, for more prosperity, for an even more intensive division of labor nationally and internationally. I think we need a free market in money. The people should decide which kind of money they prefer.
I agree, of course. Now that's optimistic. So let's now act as a well-informed optimist, meaning a pessimist. What if the sort of internet revolution allows governments worldwide to fulfill their most dystopian projects, to control everyone, which then would sort of break the back of the crypto revolution? And then we would see what if we then see, let's say, a centralization, as you mentioned, of the remaining fiat currencies into one global currency. Then could that be perhaps the IMF special drawing rights? I mean, recently this was expanded, which was sort of already, you could argue, an embryonic global currency to some in some definition, or do you think that's all in the sidelines? We shouldn't worry too much about the SDR and these things.
Well, Peter, it comes to mind. In 2018, I published a book. It was called in German "Mit Geld zur Weltherrschaft." It means the global currency plot. Maybe that's a good translation. And in that book, I tried to outline the underlying dynamics in this fiat money system on a global scale, and that it has a tendency for concentration. And at the end, there would be a single global fiat currency run by a global central bank, and I would call it a dystopian perspective. And I think it would be a very dangerous development, as you rightly point out, the digital central bank currencies, which should come to the markets according to politicians and central banks, they would clearly speed up this process. And of course, the negative outcome would be a further concentration in money production among fewer and fewer central banks. Ultimately, you have just one single central bank left, and this would be, as I said, a kind of dystopian development, and we can only hope that it is not going to unfold. And again, this would mean perfect tyranny, and so we have to tell people, inform people about these developments, and point out that there is an alternative for them to getting hold of better money, and that is a free market in money. And this is basically, I think, the only thing you can do. You have to inform people about these developments, point out where it leads us to, and show them that there is an alternative. But of course, I don't know the future. At the moment, it doesn't look good. The governments expand at the at the expense of economic and civil liberties,
Mm-hmm.
helped by the instrumentalization of climate change and the coronavirus. But look at history, it has always been a fight between good and evil and freedom and unfreedom.
Mm-hmm.
And well, we have to join that fight for freedom, and we shouldn't feel discouraged, and move boldly forward, Peter.
Absolutely, I cannot agree more, of course. And even if the dystopian global currency, the euro at the global level, takes form, there's still gold, for people to save some of their belongings in the real world, not being tracked by digital means. That said, thank you very much, Thorsten Polleit. I thought it was a great discussion, and I gladly keep in touch with you, and I hope to see more of you on Brussels Report.
Always a pleasure talking to you, Peter. I'm more than happy to support your effort. And again, you do such a great work, and keep up your good spirit and your good work, and all the best.
Thank you. I will. Thank you.
The Brussels Report podcast.